Hello and welcome to this webinar. It's afternoon here in the UK, but I know a lot of you are joining us from North America and other parts of the world, but wherever you are in the world, thank you for taking the time out to come and spend it with us while we look at and see what is happening on the American. We're going to stick to the North American market, and that is primarily the US market, looking at some indices. I think David's got quite a lot of stocks today, which is rather nice. There's a lot going on. It's the first day of the new month, and I've got some quite a lot of bits and pieces that I'd like to draw your attention to, as well as looking at some charts. But as always, before we start, may I just remind you that trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. Right, that's that out of the way. What are we going to do? Well, clearly, obviously, those of you who come along regularly will know we'll be looking at the charts through the prism of what we call volume price analysis, and it's looking at price action and looking at the volume to see essentially whether we are, what we're seeing on the chart, what's developing on the chart is actually a genuine price move or not. Generally, it's not genuine, but that's what we use volume price analysis for. The VPA throws up all sorts of signals because volume price analysis is not just, it is price action and volume, but it also includes support and resistance, hugely important, candles and candle patterns. We don't use bars here, we use candles and candle patterns to help us identify those all important signals. And we also look at time, and not just the time of the chart that we're actually looking to trade or analyze. We look at multiple time frames, and we also look at non-time based charts, in particular Renko. Clearly there's no volume on that, but it has all the other elements of VPA. To help identify the kind of signals that we're looking for, the kind of chart setups that we're looking for, the kind of chart structure that we're looking at, there is a companion book to VPA, and it contains over 200 worked examples. This is for stocks, it's for indices and commodities, and there is also a Forex version as well, and we've actually bundled it together on Amazon. It's the digital version, it's a box set in inverted commas. And just draw your attention, I know some of you have seen this before, maybe some of you haven't, because I mentioned this in a previous webinar, and I had a few emails from readers of my books, and they said, well, you don't mention this in any of your book, this idea of how you build how you integrate VPA into a trading strategy, a trading approach, into your trading tactics. This is something that we developed afterwards. The books will give you if you like, the foundation, the basics of it. And from there, we thought, well, how can we explain it a little bit better? Because, there are some traders who simply use this, who simply use the 5 elements that make up the methodology. But clearly, once you have that foundation, then you can add on other indicators. We use I occasionally use moving averages. I use fractals on my MT4 and MT5 platforms. David doesn't. He just sticks to VPA. And we have developed our own proprietary indicators to help us with different elements of the VPA methodology. And really, once you understand the structure of the chart and you understand what you're looking at in terms of the chart structure, you can then, these indicators that some are standard, some are proprietary, they actually begin to make more sense because they're there to support your analysis. I know some people use them as signals. Well, that's pretty much up to you. That's how, if it works for you, that's fine. But what it also does, once you've got this very clearly set in your mind, you will know which one of these is the appropriate one to use at a particular, when you have a particular structure, when the chart is displayed in is displaying price action in a certain way. Is it in congestion, for example? So when it's in congestion, well, your moving averages are not really going to be terribly helpful, because moving averages are brilliant when something is in a trend, but having VPA, that gives you your as I said, your foundation, your understanding of what you are looking at. And those of you who are with us this morning, We covered looking at, we're talking about support and resistance over the last 3 or 4 sessions, and we've been looking at support and resistance primarily through the prism of price-based, and price-based support and resistance is measured in all sorts of different ways. It's displayed in all sorts of different ways on the chart. You can use Fibonacci is support and resistance. You can draw lines yourself. You can draw horizontal lines. You can draw trend lines. Andrew's pitchfork is a support and resistance type indicator as well. And we can go on and on and on with the different types and methods that are out there. But you can also look at support and resistance through the prism of volume. And what we were talking about this morning, explaining in a little bit more detail, is looking at what is known as volume at price. And what volume at price does is basically it maps out on the chart how the volume is distributed at the different price levels. And what we've done as part of our proprietary set of indicators is we have developed what we call the volume point of control, which is this yellow hatched line here, because this is the most important area on this chart. We call it the fulcrum of the market. It's also the area of the chart which has the deepest level of transacted volume, and we know it's the deepest level because you've got this bulge, as you can see here. And what happens is, as the volume as transactions, as traders interact at this level, as we can see here, the price is not really going in any firm direction one way or another, and it's important to know where this area is on the chart. You know, congestion phases are where trends are born. Now, what happens, as we can see here, something, you have a catalyst come in this case it's the market open, and what happens, you have a volatile reaction, you have a huge surge of activity, participation come in, and inevitably you have the usual traps. What happens is bang down, volatility candle, and then the next candle is all whizzing back up again. It's the kind of thing that happens at session crossovers. It certainly happens in Forex, and it happens more and more with the start of Wall Street. It never used to be like this. Globex, to be fair, never had as much impact that it has now, does it, David? It was a very quiet time, you know, worldwide, the traders worldwide were sort of waiting for what Wall Street was, where focus of everyone's attention. But that has changed, and certainly changed quite dramatically this year, where, if you are a day trader and you're coming to these markets at the Wall Street Open, sometimes you'll find that, the bulk of the move has already happened. Wall Street will take it further up, but it's also trading with, against the background of what is happening, obviously, in the States. And that's something that also day traders have to be much more aware of. Those of you who have our Forex program, know about our Forex program, will understand that we teach our traders not just to analyze the chart, to look at what's happening from a technical analysis perspective, but also to consider the other drivers, the other factors that help to drive the markets. One of them is obviously the releases, the fundamental releases, which day traders will obviously be aware of, and we've just had the ISM. So as a day trader, it doesn't matter what time frame whether you're a scalper, whether you're on the minute charts, you have to be aware of the releases. But hand on heart, I can say that when we started a long time ago, we just looked at a chart and pretty much that was it. And not only that, there is another element to it as well. It's not just the releases. You have to be aware of nowadays what is happening on the political side, because monetary policy, fiscal policy rather, that is set by governments is also, there is this interplay between, what the central banks are up to, what is happening in the broader economy, and clearly we've got, the ongoing issues with the virus. So it's a much In Forex, we call it a three-dimensional approach. It's the fundamental, it's the technical, the fundamental, and what we call the related markets. I haven't come across that. I haven't decided what we're going to call it with regard to day trading stocks and indices, but I'll probably we'll come up with another sort of wrapper for it. But it's basically broadening your horizons away from the charts. Now, what are we looking at the moment? Well, we've got the YM. We've had this is the 5-minute chart. I just want to hop over to the daily, because the daily is actually quite important. And we all know the indices have all made new highs. That the key level for the Dow and obviously the YM has been the 30,000 level, which I think it hit back end of last week. What's interesting is it is also the high of this volatility candle that we have here. And what happens when we have a volatility candle is the price will retrace within the spread of the candle, and then it will either congest and it will decide where it's going to go. And of itself, it will create a significant high and a significant low. And within this volatility candle, we now have a trend. So the YM, the Dow, is in it's clearly in a trend. It's moved away from this volume point of control. What the volume point of control also does is, aside from giving us this this bulge, if you like, the most important bulge, if you like, in the volume at price type histogram, so we know this is the fulcrum of the market, it also paints or puts onto the chart what we call a low volume node and high volume node, because that tells us that when the price reaches what's called a low volume node, there's not a lot of resistance. And this is using volume, the volume imprint on this chart as a means of determining where those support and resistance is, but not just that, how strong that support and resistance is. On Ninja, we have the accumulation and distribution indicator, which is price-based, as we can see here. This makes the lines thicker, so the more times it's tested, so the stronger it becomes. What we have with the VPOC, we call this low volume node. So we know when price approaches it, it's likely to go through very quickly. But when it comes through to a high volume node, where there has been congestion, not as much as at the point where the VPOC is, it's going to take time. It's going to need a lot of volume, and it's going to need a bit of momentum, and that's what we actually got with this indicator here. Then we apply this, we combine this with where is this going? Because obviously it's at an all-time high now. What is the next level that it is aiming at? And this is where your price-based support and resistance comes in. As I said, some of you may use a Fibonacci. We've actually got a Camarilla, and it's very clearly marked on the daily chart. Now, these levels are valid for the rest of this week. So getting back to the 5-minute chart, knowing that we are in a trend, because we know we've got higher highs and higher lows. We had a bit of a pullback yesterday. We had a lot of profit taking yesterday, but it's, market is back in a good mood, as it were. So we go back to the 5-minute chart, and where are we here? Let's have a look quickly. There we are. And we're coming up to a low volume node here. We can see the price is moving up quite smartly. I haven't got our tick speedometer indicator on here, which also tells us the number of ticks that are going through the market, and whether that's a high, medium, or low number. So, but I can kind of judge it from the low volume node that I'm seeing here. What this indicator also does is, you can see these lines that it kind of posts here. These are the sort of these bands. You get the bands develop when it's at that extreme, if you like, from the volume point of control. So we know that's a nice support platform for the YM, but it still hasn't made a resistance for the to the upside, basically. So we then go to the price-based one, which is, well, from a volume perspective, it's poked through that one there, but it looks like it wants to move higher. So where does it think it wants to go? Well, it's actually, it's touching that 30,000. So all this taken together, you can then say, well, actually, it still wants to go through. I know we're reaching an important high, but you know what? that's what the market wants to do, and as traders we need to do what the market wants to do. You know, trying to go against the broader sentiment of the market is really quite suicidal. Right, so that's really on the VPOC. If you want a broader explanation of the VPOC as applied to the Forex market, and it just happens to be the Forex market, this morning's video, the first part of that video, I talk about it in greater detail. But as I said earlier, December, really important. And what's actually going on at the moment, very quickly, just to double check, we have what's happening. Yes, Mnuchin and Powell are actually testifying, I think, about the CARES Act on Capitol Hill. I mean, clearly there has to be some kind of, you know, further support that has to be given to, you know, to people who have suffered as a result of the pandemic of the virus. There are all sorts of Fed programs on the go at the moment, and what I've actually found, I actually found a screenshot, an image of what all these programs, it's like, as I said here, it's an alphabeti spaghetti of emergency measures. Again, this is what I was trying to explain to you. You know, these are referred to in mainstream media. Something happens, you know, one of these comes up on your news feed, and suddenly, you know, the price action completely rolls over or shoots up higher. So that's something else that you have to be aware of. We've had the ISM, but at the moment, clearly they might be saying something that the market likes to hear. And we have a Brainard speaking later, and for those of you who are in Forex, well, we've got the Issa Lagarde speaking later on. But to return to the rest of this month very quickly, as I said yesterday, end of the month, there was a down day. To be honest, it was just a lot of profit taking, and now we're back into December. We've got some really important dates coming into December, so if you want to take a few notes, you know, perhaps it might not be a bad idea, but this is being recorded as well. The important dates for December, the key one is the 14th. Those of you in the US will know already. This is the electoral, I believe it's the Electoral College decision, and if the college declares for Biden, one of the most important consequences, other than obviously the Democrats will have the presidency, is that Janet Yellen will be confirmed as Treasury Secretary, and the markets were absolutely thrilled. And they were thrilled because there's going to be even more stimulus, and we'll probably get some more programs to add to the image that we saw earlier, you know, in addition to the current programs, or even a new one. The 16th, we also have an FOMC meeting. And that's a really important meeting because obviously it comes after the declaration for who is the president. It may or may not. We'll see what happens with the usual rally going into the end of the year, you know, with Santa Claus and etc. etc. So we could see yet more upside. Now, the FOMC meeting is going to be preceded this Friday by the NFP, and I talked about how the importance of fundamental releases, and the NFP is now really the top release that everybody watches, and it's a really good example of, really, until this dreadful pandemic, at the beginning of this year, it was kind of, yeah, it's awfully interesting, but as far as the Fed was concerned, employment, they'd done their job. You know, the employment rate was you know, they'd got to their target. The job creation was kind of going along. It wasn't, you know, as far as they were concerned, things were looking absolutely fine. One of their central remits, which is the labour market, they had done well. So in terms of impact on the markets, it's not, unless the numbers would come in absolutely, you know, ridiculously away from expectation, it didn't really have the impact that it would have if it is now absolutely center stage. And this is from Forex Factory, and you can see the distortion that we have based on what's happened. And I can't even I've been trying to draw this up to show you what it looked like there we are. I've got 2017, that's too far back. Let's have a look. 2019, have to very carefully. Here we are. Oh, it goes too far. But at 2020, here we are. Where are we? This was at the beginning of the year. You can see here the job was fairly, I know we had a few outliers here, but generally speaking, as far as the Fed was concerned, it was all going as they wanted. But then, of course, we had the virus. It didn't happen immediately. It was back here in, where was it, in May. That's when we had, I think that's 20 million actually. So you can see how important Friday's number is going to be. And that is going to have an impact, obviously, on sentiment and what is going to go on in the stock market. But you also have to balance that with the fact that, if it's bad, you think, well, is that going to be bad for stock? Well, no, not necessarily, because it's going to say we need more stimulus. Great, the market's going to love that. So the chances are it's going to go up. If the number comes in really high, really well, and think, oh, the job market is really coming back, there ain't going to be more stimulus. So as you see how sometimes you have to think a little bit counterintuitively with regard to fundamental news. So then we look at market sentiment, and we looked at there's a lot today I want to cover, so do forgive me, but it's all to the good. The next one I want to cover is the VIX. David obviously always has the VIX, and you should always have the VIX on your dashboard. Doesn't matter what you trade, you have to have the VIX, and the VIX is really important. Obviously, it's the puts and calls as related to the S&P 500. There are equivalent indices for the Dow and the Nasdaq, but it's the one that's the benchmark, if you like, for sentiment. And the interesting thing about the VIX that is it's really been a record year for the index since 2009, the financial crisis. It's gone down a little bit since the vaccine news, and obviously the election is now out of the way, but it's really not at a level that it should be to reflect the kind of numbers, the kind of numbers that we're seeing in equities and indices. And what's it telling you? Well, it's telling you a couple of things. It's telling you that we clearly need more stimulus. And perhaps it's sending a signal to Mr. Powell that, come on, get on with it. We need more money, basically. Apologies, I have to have a drink. Now, there's also another side to the VIX, and this is something I may have mentioned before. David and I, certainly for next year, we'll be putting together something with VPA and all these things that we're talking about to help to look at how we are looking at day trading stocks and indices. And one of the things we're really going to be looking at more closely is using the option market, not just to look at the headline number, as we see here, 20, but actually look more closely at what is actually going on with the options themselves. And what's been interesting this year is that a part of the drive higher for particular stocks like Apple, the FANG stocks, has been the enormous number of call options that have been recorded by traders, in fact, by retail traders, and even by this guy, SoftBank, the big whale that bought billions and billions in stock options. Stock options are always used for trading, but also by, if you can't afford, to actually, some of these stocks are hundreds and hundreds of dollars, so you can trade them using options, and they are beginning to have a very significant impact on the actual price and the movements in the indices and in the markets themselves. So it's interesting. So it's the interaction between the cash market and what is happening in the option market, and that's something as well that we're probably going to be, or I know we will be putting into any program that we put together. Right, we've had the 14th, we've had the 16th. Now the next significant date is the 21st of December. Other than it's the winter solstice, obviously, a very, very important day astrologically for all sorts of reasons. I'm not going to go into it now, but you will hear about it from me later on. But it is an important day for Tesla, because Tesla is the day that is actually being added to the S&P 500. Now you think, well, so what? We all know Tesla's going to go into the S&P 500. By the way, just before that, on the 11th of December, we'll actually find out which company is going to be replaced by Tesla, which is even just as important. Tesla is important because it's going to be added in one go. It will be the 7th largest company in the index. It has all sorts of implications for fund managers who have to rebalance their portfolios. They have this sort of balance between the stocks that they buy in the index, and that will mean that some stocks will have to be, in order to accommodate Tesla, they will have to sell other stocks. So it's good news for Tesla, clearly, but you may find on the 21st you will have volatility. And sometimes when a company is actually added to the index, it actually falls. It happened to Facebook. It can actually fall quite heavily, maybe 10 to 20%. So if you are a trader, you're looking, you think you've marked it in your diary, you think, oh great, 21st of December, Tesla, it's going to be possibly is positive for Tesla, certainly because it's in the S&P 500, but don't necessarily expect the reaction that you think immediately. And if you just give you a flavor of the size of Tesla, as I said, it's going to be the seventh biggest company in the index. And it's I think what happened was, and it's the largest, by market cap, it's the largest to enter the index since Berkshire Hathaway did in 2010, when that was valued at 127 billion. So it's a big whale, and it's going to make a big splash in the index. And certainly, for people who buy index funds, as I said, there's a lot going on the 21st. It's the solstice, all sorts of other things. So it's a very, very important day, as I said, especially coming up just before Christmas. But we'll look at it more closely as we approach that time. Now, and just finally on Tesla, you may know this is the beginning of the year, back in February the 4th. It was the most shorted US. Tesla, there's a couple of fund managers that I get newsletters from. They tell me what they're up to and what have you. And one of them sold his Tesla holding before before it went absolutely ballistic. And this is such is life, as it were. But it was always the most hated stock, if you like, almost by the institutions, and it was the most shorted. 24 million of its shares, 18% of its float was being shorted at the beginning of the year, and those shorts have been absolutely bulldozed. Basically, they have lost so much money. Well, good luck to Elon Musk. He's done what he has done. Whatever you think, and this is, and in a way, the shorts also bring me up to another aspect of trading, is that a lot of them did it out of opinion. They either didn't like him. To be fair, the company really, to get into the S&P, you have to show X number of quarters profit and growth, and I think it's 7. They finally made it to qualify, but up until that time, I suppose you could say, this he keeps hyping this company. Is it a pump and dump, and we're just going to short it because it's he's not making any money. This is ridiculous, and away you go. And also from a trading perspective, another thing we're going to cover as well is to look at the number of companies that are actually heavily shorted in the market, because often as a day trader on that list of companies there will always be a short squeeze. So as a day trader you can think, okay, say Tesla, heavily shorted, that's their opinion. That there's probably going to be a short squeeze. It's going to make a fast move to the top. There's going to be a short sharp rally, and I'm going to buy it as a day trader. I'm not interested in owning the stock. I just want to trade what is likely to happen. So that's something else we're going to cover as well, how to use the information that is out there about stocks, using their float, using relative volume, using the list of what shares are actually being shorted at any given time, because that can give you a little bit of an edge to know what is happening or not. And certainly when put together with indicators such as we have developed, and understanding what you're seeing on the chart in terms of support and resistance, in terms of price-based support and resistance, volume-based support and resistance, you will, it will give you a much clearer idea of not only your potential entry points, but more importantly, where this instrument is likely to be going next. Right, so that's my little intro to the beginning of the month. Sorry, apologies if it's a little bit longer than usual. I hope you've taken a few notes, because you can always listen to the recording again. But in all seriousness, this is the kind of background stuff. It's the kind of research you have to sort of, get together, as it were. I wish it were as it was back in the day. We literally just, fired up the terminals, took adjusted the satellite dish outside the bedroom window to make sure it was pointing in the right direction, and away we went. It's not like that anymore. It's a little bit more complex. It's not complicated, it's just complex. You have to put all these things together and really be sort of aware of the much broader economic landscape, and even these days the geopolitical landscape. Right, that's all I've got to say. If you've got any questions on everything I've said, just please pop them into the chat box. I'll be more than happy to answer them for you. I'm going to pass over to David now, because he has been looking at the price action, having absorbed hopefully everything I have said to be aware of, and we'll see what is happening on the charts. And getting back to the wire. Let's go away from Tesla for a minute. Let's have a look at the YM at the moment. Yeah, well, it's definitely on and up at the moment, but as I said, a lot of that move has in fact already happened in Globex. We've got we know what the high is, the intraday high, and we know what the longer term high, which is this 30,000 level. So we'll see what happens as we go through the webinar.
Hi everybody, I hope you enjoyed that. Fascinating stuff there, loads of information. There'll be a lot more to come. We'll be doing a lot more on stocks once we get TradeStation up and running on TradeStation Securities, because it is a massively powerful platform. You've got 1,000 stocks in the radar screen, which is effectively having 1,000 charts up at once. It is hugely, it's an awesome platform, I have to say, and particularly strong if you've got if you're searching through a large database of stocks. I thought we'd start with stocks actually, just for a change. I've got everybody's favorite up here. This is Apple. This is on 3 minute. Just to highlight the fact that whatever we talk about, however we do it, the same principles, exactly the same principles apply. I'll pull over the trading view as well, because I've got the dollar, I've got the Dixie over there on different time frames. I've got the VIX as well. So I'll pull that over in a minute. But just to highlight this, was a nice little example here of VPA in action. We had this rally for Apple, got up to this level. We start to see weakness coming in, starts to roll over. Why are we seeing weakness? Well, the volume is falling away, so we've got a rising market on falling volume. So it's no great surprise to see this waterfall start to develop, start to see rising volume on that. It's not hugely strong, but it's just an example of the fact that it's almost irrelevant what is on the chart. It's understanding the price action, using volume price analysis. You can see here how the trend monitor is starting to transition. We had this bullish move. I haven't got the trend dots on here, but we'll have them on there as well, obviously. Bullish uptrend, then we get the transitional colors coming in, and then we're starting to see this reversal take effect. The question is, where is it going? Well, if it gets down to this low volume node here between 121.20 and 121.60, so 40 cents in here, it should move through there pretty rapidly, because as you saw in the uptrend, it moved through there rapidly. So there's little, as Anna was saying, there's little volume there to act as, in this case, support to the move lower, and therefore you would expect it to move through there fairly rapidly if it gets that far. Once it starts to go down to 121.20 and deeper than that, down to 121, then you start to move into this much higher area of volume, and of course right the way back down to the volume point of control at 120.48 odd. So it's just another way of looking at support and resistance. These levels here are from the accumulation distribution indicator. They are price-based support levels, potential levels. If we get below through the VPOC, then that could well come in as a platform of support there. Very strong. You can see how thick the line is there. Less thick on this one, much deeper. And you've got a little single one there as well. You've got a little cluster of two there, but this one is very strong, very substantial level. So if we get down to that sort of region, then you would expect the first two stages, or the stages of this move really go something like this, down to this level, through there pretty quickly. Then you're like to see congestion building. If we get through that level, further support coming in here, and probably some oscillation around the 120.40, 120.50 area. That's just a very quick analysis on, you know, a key stock, a stock that everyone trades, a lot of day traders in here. But it just gives you an idea that whatever it is you're looking at, you can take whatever it is off the chart, and it really makes no difference. Nvidia, that's one we're short on at the moment. I wrote about that, I think, last week from memory. In fact, a couple of these we've written around recently. Tech, we've got Microsoft here. You can see Microsoft is just trading sideways at the moment. It's channeling around the volume point of control. It's building these nice floors and ceilings here on the accumulation and distribution. So these, every time these are tested, they're going to get ever stronger. And then, of course, the nice thing is once it starts to break away from that, you've got the nice opportunity not only for a breakaway trade, but you've also got a very strong corridor of price-based protection, which is going to act in your favor if there's any retracement against the position that you actually take. And in addition to that, it's very clear where to place your stop loss. If the market breaks to the downside, you're going to be placing it above this area as long as it fulfills your money management rules. Equally, if it breaks to the upside, you have a very strong floor down here somewhere. It's just a great way of trading, and it just makes it almost very simple in terms of you don't have to think very hard about where to place your stop loss and stop loss management thereafter. Just think what else we've got here. Tech, that's another one we wrote about. Dear old GE, it's just flapping about in the $8, $9, $10 area at the moment. It will come back one day. When we were trading it, it was up at $36, $37. It's a long time ago since it's been there, but there we go. This is GT, is another one, one that we used to trade very heavily. Goodyear tires, again, that hasn't had a great momentum behind it for the time being. Right, let's go and see what's going on elsewhere. Let me just pull this over first. Pop this up for you. There we go. Oh, by the way, let me just show you. This is quite funny actually. This is the live feed, believe it or not, for the. I won't switch it on. This is actually Powell and Mnuchin testifying, and I have to laugh because he looks as though he's sitting in some sort of bedroom somewhere, almost in a cupboard. You would think that the lighting might be a little bit better. Yes, yeah. It's just, you know, quite strange really, but there we are, strange times, I suppose. Here we are, we're on, I've got 4 charts up here. I've got the dollar index over here. This is on the Renko, and you can see what's happening to the dollar at the moment. And I've got this set to 10-minute on the Renko here as well. This is the dollar index on 5 on a regular time-based chart, so you can see what's happening. It's bearish at the moment, obviously a lot of volatility around what they're saying. But generally speaking, it is to the downside, and that, of course, should be helping equities. But what's happening on the VIX here on 5-minute, this is all over the place, lots of volatility. It's trying to creep up. As Anna said, it was still up at 20.6, which, when you consider where the indices have come to or arrived at, it's ludicrous. The VIX should be down in certainly around the 10 or 11 mark. And it's been oscillating around the 25s, 26 for a long time, and just about managed to creep down to sort of low 20s. But it's still refusing to move down to those lower levels where you would expect it to be, given the moves in the indices. Let's go over on to see where they all are. This is the 3 of them. Lots of volatility as you'd expect. I've got the YM, the NQ, and the ES on 5-minute. And as you can see, the VPOC, the volume point of control, is very much in evidence on those time frames. So it really is oscillating around there. Let's go on to the multiple time frames. I think I've got the YM up. See if we're, and as I said, I'm always saying this, if the markets are in this sort of mood and they're reacting to speeches or whatever it may be, then you have a choice to make. You know, you sit it out and you say, no, I'm not going to trade, I'm going to wait. Or alternatively, if you are going to trade it, then you've got to move down onto the faster time frames, really be light on your feet. There's no hanging about because you don't know what's coming next in terms of speech, what they like to say, a word, a phrase, whatever it may be. It's exactly the same as a central bank speech after an interest rate decision. So you just have to be light on your feet. If you're going to do it, you've got to move down to sub 1 minute, in my opinion. It's tradable. Let's go up to the 1 minute. You can see the trades there. You know, there are trades to be taken. Decent move there. It's come down to the VPOC region. It's going to be trading around that area. But as I say, you know, there is a decent move there. Let's go on to 15 seconds. Same sort of thing here. That's fine. You know, it's supported by the trend monitor. It's doing its job. That's what it's there for. The price action goes into congestion here. What does the trend monitor do? Well, it doesn't initially, it doesn't change. Then it starts to signal a potential change. But then as the price action comes out the other side, it then reverts back and supports the original sentiment. And that's how it's designed to work. You can see it here. It's now saying it's overrun the congestion. It's kept in bullish mode. Then gradually as these in bearish mode, as these bullish candles begin to develop, it then starts to signal a potential change into the darker blue. So we've gone dark red, dark blue, and out the other side into the brighter blue. And obviously what we want to see in conjunction with that, if that is going to continue, we want to see the VIX come off. At the moment, it's climbing. It's gone from 20.6 to 20.7, but it is trading in a volatility candle. And in addition to that, the dollar is still falling, although there's another volatility candle coming on 5. So we may see a retracement on the dollar. But that's basically what you're looking for. And it's just, it's guerrilla tactics. This is not get in and stay in for, you know, half an hour, 40 minutes, maybe 20 minutes, whatever it is. This is get in, grab some points and get out again. You might only be in for 10 seconds, 15 seconds, 20 seconds, 30 seconds, maybe. You know, that's it. It depends how it goes. But the trend monitor is doing its job. Now, if this is going to develop into something half decent, then you're going to see it transition through onto the 1 minute. You'll see this color, you'll see the red here will start to transition into a darker red, and ultimately that will go to the 3 minute and down. If it's a stronger trend, it'll go down onto the 5 minute as well. You can start to see the evidence of it here, beginning to change. What you've also got here, you want to, obviously we're looking at the volume. The volume doesn't look great. What's happening? We've got a market rising, we've got volume falling, so it hardly looks strong at the moment. It's anomalous. Why is it anomalous? Because when you're looking at the linear relationship between a candle and a volume bar, that's fine. You know, is it in agreement? Is it in disagreement? But then you start to put it together in terms of groups of candles and groups of volume bars. And that is when it becomes, you're basically zooming out from the chart. So you start at a very granular level, if you like, of one single element of the candle and the volume bar. And then you start to step away from the chart, you're zooming back and you're looking at groups of candles like this and groups of volume bars. So we're seeing a rising market on falling volume. Why is that a sign of weakness? Why is it anomalous? Because if a market is to go up, it requires volume to go up. In the same way, if a market is to fall strongly, you need to see rising volume because it takes effort to go down as much as it does to go up. This is not gravity. We're all familiar with gravity. Yes, we understand the principles of gravity. It takes effort to get off the ground, but in trading, it takes effort for a market to fall. So it's not a great analogy to use. You have to see rising volume in a falling market and rising volume in a rising market for those trends to develop in the right way. What we're also seeing here, we're trading around the volume point of control. Got an absolutely ton of volume sitting above us here. So that is going to be hard work getting through there. If we can get up to this level, then this is going to be much easier because the volume is less weighty in that area. You've also got virtually nothing in the way of price-based resistance to come into play. You can see the little 1 here. That's only been tested and held once, so that's minor. What we've got below us now is significant. We've got this strong platform here, which has been tested 7 times. That looks as though it might be breached. We'll see if this candle closes off. We're on 1 minute. If that's breached, then that is going to obviously act as a barrier to any reversal against it. So it is now acting as resistance to any reversal back towards the volume point of control. And in addition to that, on these last 2 candles, we had the reversal here. So we had some selling coming in here, some more selling on that one, wick to the upper body. All I can say is that at the moment, this is coming into play. We're trading around the volume point of control until you actually break away from that particular region with some decent volume associated with it, then it is going to stay there. Just seeing what's going on over on the right-hand side, just to keep you up to date. The dollar is still falling. That's now down at 91.47 on the Dixie, and the VIX is up at 20.8, so that's kind of stalled at the moment. Not really going anywhere. We want to see the VIX falling, which it isn't. The dollar is still falling, down at 91.45 now. So that's where we are on the 1 minute. And we've got the VPOC here. We've got the VPOC literally on every single chart. All 6 charts have got the VPOC right slap bang in the center of the screen. So what that only tells you one thing: the market is in congestion. You've got to wait and be patient. There'll certainly be trades going on in terms of the US, the majors, currency majors. Probably some decent trades going on there because the dollar's falling quite strongly. But we'll stick with the indices for the time being. We've got a volatility trigger on 10, so we know what's like to follow from that. There we go, decent move, volatility trigger, back inside the spread of the candle, all trading around this range. Not going anywhere for the time being. We just have to wait and be patient, or as I said before, you go down onto these very fast charts and you just hop in and hop out on the signals that you've got. Ton of volume coming into that last one. Wick to the upper body, you may not be able to see it there. Some selling going on in there. See what this next candle does and how the volume shapes up. Okay, it's fine. This is anomalous, but the buyers are still in there. They've managed to overcome that. Decent candle, no anomaly, decent volume under there. We've got to battle our way through here. This is a resistance coming in overhead, quite strong. See if that's coming into play right now. See if that's taken out. If it's taken out on decent volume, fine. Doesn't look like it is. We've got a platform below it here as well. Another one of the same weight, if you like, of 3. Again, this has been tested 3 times, so it's strong. Let's see if we're going back down onto the volume point of control. Probably are. And really, it's all signaled off the volume that is coming in the whole time is just giving you, just read it in conjunction. You're just looking at it. This spike here, this doesn't look nice. At the very least, expect congestion. After you see something like that, you're not expecting the market to roar higher. There is going to be some congestion because there's selling in that particular candle. The market may well continue. There is definitely selling in there, and it's it's not a strong picture at the moment. You can see it here as well. Not anomalous, but the buyers have hardly followed through with great strength. You've got a little up candle and some low volume on there, so hardly looking strong. What else can we see here? As I say, pretty much all the same. It's just going sideways at the moment. Let's go back onto, let's go and have a look quick on stocks. Let's see what's happened to Apple. Move that out the way. Where do we get to on Apple? Okay, we stopped out there. Didn't fall particularly out of bed. Still a nice little move if you're day trading it. What's interesting now on the 2 candles here, you've got this little rally going on. Then we get these 2 little candles. So these candles are selling candles. We've got a closing on the lower than the open, but the volume there is also falling away. So what that's telling you is that the selling pressure under here is pretty minimal, and it's also falling. So there's a prospect of this trend continuing. We want to see what this volume is under here, under the next candle, but it's it's starting to look a little bit bullish again. As I say, the dollar is still falling, so that's going to help. Let's go on to, I'm not sure what I've got on the, I've got YM on the Renko. That's the YM on the Renko. This is using the combination of a time and non-time based chart. It's an immensely powerful approach. I highly recommend it. It's one I use a great deal myself. Basically what we have here are the 15-second, the 30-second, and the 1-minute charts below. So we're looking at the time-based charts as you would, and above that I've then got the Renko chart, which is set to the same time frame. So if I just reset these, this is on 15-second, and this is the NinjaTrader. This is the Ninja Optimizer that we developed, the Optimizer indicator. We just click on that, and that's telling us that right now we should be trading on an 8-brick Renko. So each of these bricks will be 8. We're on the YM, so this is 8 points, but if you're on the ES or the NQ, it would convert that into ticks. It just goes to the lowest tradable entity. And on the YM, it's a single point. So we're on 8 here. Let's just refresh this, see where we are on this one. This is on 30-second. So what the optimal setting is, it was 15, we've come down to 12, so there's some momentum coming into the market now. Click on that, we get our 12 brick. And over onto the 1 minute. Let's click on that. That's on 17, excuse me. So each of these bricks over here is worth $85. And what you will find is that the slower the chart, then the larger the brick size. But this is basically the Renko Optimizer delivering the perfect brick size for the session at the time that you are trading. Excuse me for one moment. In other words, it's not guesswork. It's not you deciding for yourself what brick size you're going to have. This is the indicator based on the momentum that is in the market right now, delivering that optimal setting for that particular brick. And it's hugely powerful because you're trading on, you've got the blend of using a non-time based approach using volume price analysis. So down at the bottom here, we can analyze the chart using VPA with all the indicators as you would expect. And above here, you've got a momentum-based chart because a Renko chart is not based on time. Although they have been set to specific time intervals, the speed that these bricks are built is not dependent on time. It is dependent on how fast the setting goes through the chart. So in this case, we've got 8. As soon as 8 points of movement have gone through, then the brick forms and it's on to the next one. So that's completely independent of time. This is the metric that governs it, not the chart to which it is attached. The same here and the same here. The reason it works is because it gives you the option to trade trade slower or larger bricks rather than smaller bricks. So if you want to trade a larger brick size, you go out to a slower time frame. If you want to trade, I can put this on 5 seconds. And you would get smaller bricks still. You would get maybe down to 2 or 3 points, which is $10, $15 a brick, whatever it may be. So you have that option with the optimizer. You can of course set it to what you prefer, which is fine. The way I think 99% of people who have the indicator use it is in this way, using the optimal setting. The indicator calculates it for you and delivers it on the chart automatically. You do need to update it, obviously. The faster you're running, then you need to update more regularly. If you're running on the slower time frames, then you need to update less regularly. It's as simple as that. But it's immensely powerful. You've got the trend monitor below. We've got the trend dots on here, which gives you, the trend dots give you a close price action, a very close view of the price action. The trend monitor takes the more considered view. And when you're using it like this, you're looking at in exactly the same way as the time-based chart down here. You're looking at it hopping across and trends developing as they move through the various time frames. Just pull this over again on Trading View. There we go. This is what's happening on the dollar. This is on 5, this is on 10, this is on the 5-minute time frame. So it's still very much the downside. And this is what the VIX is doing at the moment. It's sideways, a lot of choppy price action, which is what we're seeing at the moment. So it's very much sideways, just a question of being patient, waiting for those opportunities to come along. To see what else is going on. Oil was pretty unexciting earlier on, but it's actually developing a bit of a move now. Let's have a look, there we go. And whenever you look at a chart, my eye is always drawn to two particular opportunities, either very high volume or very low volume. That's what I'm instantly looking at initially. What am I looking for? I'm looking for those opportunities where I can take trades either based on buying, selling, or trap moves, whatever they may be. In this case, it's pretty obvious what's going on. Absolute ton of buying coming in under here. The volatility triggers come in. You know what's going to happen. At the very least, we're going to trade sideways, probably going to reverse off that in due course, we will see. But you know, all of that is triggered through that the volume of the prism of volume that's associated with a single candle. You can see it here. You can start to see the buying coming in. This is on 5 minute. So this is just, if you overlay that candle on this one, then you know that's what you end up with, but you see it on a different perspective on a 5 minute time horizon. We've got volatility trigger over here as well, so we're expecting congestion forming there. You know, it's putting all the pieces of the puzzle together. Let's go and see what's happening to poor old gold. Been under the cosh lately. It's having a good day today, trying to rally a little bit down here. You can see it on the daily chart, but again, tradable in exactly the same way. And if you're indiscriminate as we are, then you know it's a question of which accounts you're trading, what particular markets. Go and have a look at the currency futures, get a straight line view on the dollar. This is the, as I say, currency futures, 6A, 6B, 6C across the top. So this is Aussie dollar, pound dollar, and this is CAD dollar, not dollar CAD. So it's the inverse on futures. Down at the bottom, we've got euro dollar, this is yen dollar, and New Zealand dollar over here on the right-hand side. Really strong platform. You can see this on the accumulation distribution. When you get these two levels here, these are two very strong levels acting as a platform of support now for this particular currency pair. But when they act in this way in a cluster, immensely strong, immensely powerful together. And in isolation they're strong, but when they cluster together like that, massive platform of support. You can see it again over here. And bear in mind, these levels that are presented by the indicator, they are not, you know, we're not talking about huge, great sort of swathes of the chart where, well, there might be a bit of support here and there might be some resistance here. You know, these are down to the nearest pip, which is ridiculous when you think about it. But that's how we've developed it. That's how they're presented. You can see the other one up here, very strong at the top here. So you've got this really nice channel, these two channels here, very strong level of support, very strong area of resistance acting up here. And once it starts to break away from those, you know, the world is your oyster. You start to think, okay, fantastic. I've got these very strong levels which define where my stop loss can go, and also give you protection against any retracement. Just looking over here on the CSI, you can see we've got some decent selling on yen, which is not surprising. Just go to the currency strength indicator, the currency strength multiples, wherever they are, I can find them quickly. There we go. Drop them out of the way. That's what we're seeing at the moment. This is on 15. Pull that over a bit. Lots of yen selling. So, you know, the markets are, the sentiment is trying to rally. You know, that's what it's telling you. You've got the euro rising here strongly. These are all falling. You've got the dollar here. This is the selling of the dollar that we're seeing that is still going on right now. It's now down to 91.43. Still falling, and that's why we're seeing it there on the 15-minute chart there. Just go back, see where we are, see if we've seen any movement. Not really. Still trading around those sorts of levels. You know, not going anywhere particularly fast, but again, it's a question of being patient and waiting. And finally, just go back to the multiples. There we go. trying to develop a little bit of upside momentum. You can see the buying that came in here under this particular candle, came in to stop that selling. We're now starting to try to break away from the volume point of control. Gone through that level. That was a key level there. Oops, sorry. I did get rid of that. So we've gone through that particular level. That will now act as support. Off up to the upside. What's the volume doing? Well, it looks a little bit weak. You know, it's not driving through particularly strongly. Nevertheless, you know, there is a decent move there going down onto 15-second. See where that's going. Going up into the low volume region. Should be fairly swift through there. Over onto 1. Okay, what have we got in the way? Okay, we've got low volume region here, so that should be pretty easy going through there between 405 and 410. Once we get up to 410, might struggle a little bit. Little bit of price-based resistance ahead. These two levels here, and a lot of volume up here. So, you know, given that the price action was oscillating around that region, for it to get through there, it's got to move through pretty swiftly. The VIX is starting to sell off now, back down to 26, so it's come off from 20.8 down to 20.6. So that is helping to push this move higher. The trend monitor, you can see, is transitioned. Move through here. We came out of the bearish into the transitional, back into the bullish now, moving to the upside. And a slightly slower, more relaxed time frame down on 5. Similar sort of picture. Various levels of price-based resistance and support coming into play, taking this one out, moving through this low volume region here very nicely. Volume building here, so again, expect some congestion to build. If we get as far as, I don't know, 25 or 30, then we're up into, you know, the volume starts to fall away dramatically, and we should see that move through there much more easily, much more swiftly, provided the volume is helping to support it. I'm going to pause there because we're going a little bit over time now. So let me just wrap up. Just see who's going. Still going on. There we go. Hey ho. This is where you'll find all the indicators at quantumtrading.com. MT45, NinjaTrader 7.8, and TradingView. And yes, TradeStation is coming. Rest assured it's coming. Been a long time. It is a fantastic platform, and Anna and I will be doing a lot on stocks on TradeStation. In fact, they probably will be exclusive webinars on stocks on TradeStation using the power of Radar Screen, which is awesome. And then we have TradeStation 9.5, which is TradeStation Global, which will be more currency futures based and with the currency indicators there as well. And that's driven by Interactive Brokers. So if you have an IB account, it's a great way to hook it through to TradeStation, and you can trade through that account using the TradeStation platform. Very powerful. Once we've done that, we'll be dropping onto Dear TradingView and porting over all the other indicators that are missing from that because we couldn't code them at the time because of the scripting language. It didn't give us the flexibility. It does now, which is great news. So we will be adding them there. If you have the TradingView package, if you've bought it already, great news for you because you'll get all the other indicators free. And that's principle exactly applies to anything else. If you invest in any of our full packages, you will get all the indicators we develop in the future free of charge. Some of our customers who've been with us since the start, 7, 8, 9 years ago, they've had all the indicators we've developed since free of charge, never paid another penny for them. We just add them to your account. I don't know of anyone else in the world who does that, certainly not in this business anyway. So, you know, we're very proud of that. We don't talk about it enough, to be honest, but there we are. We've done it today, so it's there. Finally, on the Forex program, I know we've got 1 or 2 of our students here. Nice to have you with us today. The education program, the complete Forex trading program, has been hugely successful, and it's now even, I was going to say more successful. It's now a fully rounded program because we've added the funding. If you're on the program, if you join us on the complete Forex trading program, become a student of Anna himself, then you have the option to join the funded program. In other words, you can have a funded account funded by us from $5,000 all the way up to $2 million. Some of our students are already on the program. They've already joined. You can join at various levels. There's a $5,000, $10,000 or $15,000 account. You start with that as your evaluation. And the good news is that you also get profit kickbacks on it right the way through the program. So you'll actually be earning. So you're leveraging your knowledge. And the reason we've made it exclusive to our students is because we believe our education program is the best in the industry. It gives you all the information you need. And once you've got that information, we want to give you the opportunity to leverage your knowledge, to actually start earning from your knowledge. And the best way to do that is to give you a funded account. You're trading someone else's money. There's no risk to you. As it says at the top there, there's absolutely no risk to you at all. You are not trading your money. You keep your money safe in your trading account and you trade ours. It's as simple as that. Fantastic program. We're just very delighted to have it alongside. You can find all the details here. Just click on that button and that'll take you off to the right page. Finally, Anna's site, that's annacooling.com. You'll find all the books there, all the analysis we do during the week. All the books are up on Amazon, either in Kindle or paperback format, and they're all here. That's it. Thank you so much for coming along today. Hope you've enjoyed it. We certainly have. We love doing these sessions. And as I said, we will be doing an exclusive session weekly, probably starting sometime in the new year on TradeStation. So there will be probably 3 webinars a week. We've yet to sort that out, but we'll keep you posted. If you're registered on Anna's site, you will get the details there as well. And there will be a new series starting in January anyway, so you'll get the details coming through on the email too. Thanks for coming along today. We do appreciate it. Hope you've enjoyed it and enjoy the rest of the trading day. And we will see you again next week at 7:45 UK time for the London Forex session next Tuesday. So enjoy the rest of the week. Stay safe and well and look after yourselves, and we will see you again soon. Bye for now.